Today is Friday, May 1st. My name is Evan Medeiros. Welcome back to another market recap video presented by The Trade Risk. So we got our new format here, new intro, new format. Part one of what we're calling this new sort of series is going to be in a different format, right? So we're not looking at our dashboard anymore. We're going to look at actually a more in-depth view of some different areas of the market that we didn't previously cover in the past. So you can see in part one here on that list in the left, we're going to be looking at market internals, sectors, volatility, credit markets, and we're going to be grading the market at the end of it and just sort of figuring out if this was a quality week for performance and just for all around health of the US market. And, you know, the comment here that I really want to make, and this is where I really see the direction of this going, is we spent a lot of time, exclusive time, just on surface level price action in the past videos. And price action is not going away. It is the absolute most important thing to focus on. That's not changing. However, we do believe that there are some other dimensions that we can sort of analyze here to give us some context about what's going on in the market. And my hope is in this new format, we can sort of, I can sort of educate and share those things on a week-to-week basis. Some things that I don't think you're gonna, I don't see talked about too often in a lot of the other, just price action analysis out there, because there's lots of people analyzing price action. But some of these other things we're going to start looking at and incorporating it all together, I think, or at least I hope, is going to be a good new kind of novel format that should help both you and I every weekend to sort of get a feel for what's going on out there in the market. So hopefully you enjoy. Again, please, I welcome any and all feedback on this new format. Things are going to be a little different. So, I'm still sort of figuring out the best way to present some of this information. So over the next couple of weeks, we'll be kind of changing things up and figuring out what makes the most sense. But hopefully, again, with your feedback, we can get to a nice weekly, recap video that everybody, can really benefit from and enjoy for the week ahead. And one other comment in terms of like production, in terms of delivery and actually publishing this, it will be a little bit later on Friday on a publish release time than previously you've been accustomed to. It just takes longer in this format. I'm putting more, there's more creation here, content in the front half of this. So these videos will be coming out a few hours after the market close on Friday. At least that's the way I see it right now. Hopefully though, it'll still be, kind of pretty similar to what it used to be. So without further, let's jump in. So first here, we're going to look at just stock market, equity market performance. So we can see on the week, it was pretty mixed. The S&P 500, NASDAQ closing the week negative. You can see in the right-hand column there that we did end up closing negative for those two markets. The Russell 2000 was the bright spot here. So we did have nice outperformance in some of the most beaten up areas of the market. So this is namely energy and financials that really helped fuel a lot of the outperformance there in the Russell. And even world markets actually managed to eke out slightly positive gains there this week. Again, they have been pretty poor performers. The US has been on a relative basis outperforming the rest of the world, and we're starting to see maybe the rest of the world is at least playing a little bit of catch up there. And I think that was sort of the trade that was going on this week. Most beaten up areas of the market, seeing rotation, seeing a surge, seeing a bounce, while some of those prior leaders like the mega cap technology companies, which a lot had earnings this week, but we did get a lot of sort of stall outs and maybe just some short-term exhaustion after some strong runs in a lot of those companies. So all in all, mixed performance, but Russell 2000 trying to stage a nice rally there. If we look at market internals, so here's a new view, and this is a super important view that we're looking at here. And the first row, if you look up here, is the net 52-week highs minus the lows each day here. So this is basically telling us on every single day this week, were there more stocks making new 52-week highs, or were there more stocks making new 52-week lows? And you can see today that it was a unanimously positive week. We had not a big number, right? From historical measures, 20 stocks making new highs isn't a rip-roaring bull market by any stretch, but you will notice that it was net positive. So that is a constructive sign, particularly on Friday, on these Friday numbers. These are sort of estimates. I don't have the final numbers reported on this. So again, if you're watching this video on Saturday or Sunday, these numbers probably look a little bit different, but they should be in the ballpark of what we saw for Friday. And if we look at the NYSE cumulative AD line, so this is just the number of advancers and decliners each and every day, you can see again, net on the week here, we had more stocks advancing, 2,300 net advancers after the whole week was done, which again tells us that breadth actually was pretty decent today, despite some of those turnaround and some of those kind of bearish outside reversals, which we'll talk about later in this video. The third column here, or the third row, sorry, is the percentage of stocks above the 20 SMA. Just kind of a fun stat in here, very, very shorter term kind of focus, but you can see, Tuesday, Wednesday, Thursday, we had 90% of stocks above their 20 SMA. That is a good short-term indication of strength, but we know that, ultimately there's only one way to go when you have numbers of 90% plus, and it's eventually going to be lower. So we did see that number drop to about 62% on Friday. Now, if we look at sectors here, sectors sorted by, and in all of these, we're sort of looking at the weekly column here. The sector performance here sorted by the strongest on the week down to the weakest on the week. And again, you can see energy at the top of the list, communication services, materials, financials, industrials, all names and areas of the market that haven't been doing so well in the past month or so, all dominating this week. We did see kind of the safety trades take a bit of a backseat this week. Utilities, healthcare, staples, all the biggest underperformers, followed by real estate and consumer discretionary. Now, if we go into volatility term structure, this is a really great slide and picture I want to start showing on a weekly basis here. And it can be a little confusing and maybe even a little intimidating at first, but let's try and break it down here. So we have the blue line that you're looking at is volatility for this week. So as of the close on Friday, this is what the volatility term structure looks like. The orange line that you see printed is last week's. So basically looking at a week over week difference between what volatility looked like today versus last Friday. And we're looking at the spot VIX, which is this leftmost data point. Then you have the 3-month VIX, the 6-month VIX, and the 1-year VIX. And so basically, this is what they call volatility term structure, and it basically helps figure out what the market is pricing in terms of future risk. And generally speaking, during a healthy market environment, you see this nice, just higher curve starting from, kind of bottom left, going up to the top right, and it's a little bit gradual, but that's generally a healthy slope. That's a general contango healthy market environment. Notice though, we don't really have that. We have these front months which are stacked at a higher price than the 6-month and 1 year, which basically tells us that the market is pricing in elevated fear or has elevated uncertainty in the next 1 to 3 months. So basically, when we look at this, it tells us another clue about the market environment, that things are still uncertain. We've enjoyed a nice rally, an extremely strong rally off of the lows, but it doesn't mean that all risks are gone here. It means that the market still has worries out there, and rightfully so. This also tells us that volatility generally on this week has come down. So it did come down a little bit based on where it was last week. You can see basically the blue line is almost in all cases lower than what it was last week. Slight increase in the VIX on the front month VIX, but all in all, pretty similar and a pretty, kind of a worrisome sort of environment is what that tells us. Now, if we look at credit markets here, you can see credit on the week was mixed, mostly negative though. You can see the investment grade corporate bonds firmly negative there, 1% on the week. High yield did manage to eke out some slightly positive gains. But generally speaking, not the greatest performance there in credit markets, and credit has been lagging a little bit as the equity markets have been rallying. That's not really an ideal sign that you want to see there either. Last but not least, for just kind of a general view here on interest rates and commodities, I'm not going to spend too much time here, but I just think it's an interesting slide to keep up. Doesn't necessarily... none of these, directly correspond to, good or bad in terms of stock market performance. These are sort of tangential markets. You can see yields, obviously, the biggest things that would affect and do have certainly a role in affecting market performance. You can see yields were up, generally speaking, this week on the 5, 10, and 30. You can see gold was down, silver was down, and crude oil was down. So when we really just think about the performance here and we look at a report card for this week's market, right? Forgetting about trends, forgetting about anything else, just how did the market perform this week? We kind of give it this 2 out of 5 rating, which I would give it a C. That was the performance this week, and we're going to look at the price action just a little bit, but the reason it's a C is because, despite the fact that we did have a lot of outside reversals, you got to give some credit to market breadth. We did see a good deal of some strength out there, or at least a little bit of resilience in market breadth. And we also saw the risk sectors outperforming, and that is good. So those two things should not be ignored. And I think, again, this speaks to kind of looking at this type of view of the market, is that we can get a little more granular than just price action, because if we look at just the charts, we can see, there's definitely some outside reversals. There's definitely some things of concern. We're going to talk about those in just a moment. But under the surface, there are a couple of decent things happening this week, so let's not forget about them. Overall, report card for this week is a C. So that's it. That's part one of the new kind of intro here. And again, I'm going to be tweaking this. Welcome your feedback. Hopefully this was helpful. And now we're going to jump into the charts as usual. All right, let's jump into part two now. We're going to look at some charts, our old favorite views here with our trend filters applied. Now, just to sort of make the transition, in part one, we really covered what happened this week. Where did capital flow? How did sectors perform? What did volatility do? What was the overall regime and sort of behavior of the market this week? And now we're going to put it in sort of contextual trend and volume, right? Now we're going to look at how have things been progressing over the past, 1 to 3 months. And that's what these views are going to help us get to now. So when we look here at the top left, this is a weekly time frame for all of these charts right now, but the S&P 500, you can see, is still, or is now transitioned into the sort of transition trend filter. So it got all the way up to this declining, this sort of sell signal on the S&P 500. You can see it's still below it, but enough strength where this is starting to say, okay, we're back up here. Let's pay attention closely to how the market reacts here. So the S&P 500, closed slightly negative here on the week, but it did test it did test our trend filter here, and essentially failed, but we'll have to see, again, how this follows up next week. NASDAQ 100 went positive this week, so this is an interesting development here. The NASDAQ has now shown enough strength that it has turned our trend filter positive here on a weekly basis. So very encouraging action there. We're going to continue to monitor it. It's still the best, and if you're looking at long trades, if you're looking for relative strength, you're going to find it in the NASDAQ. The Russell 2000 again had a nice rally this week, and it was enough to kind of move us back and transition us from red to yellow, which some of you wrote in asking how to interpret this in terms of an actual trade. and I'm reluctant and a little hesitant to go too in depth into turning this into immediately into a trading system. But generally speaking, when something is in the yellow state like S&P or IWM, it basically means there's mixed information. You're getting mixed signals. There's a battle going on, and you really need to drill down in your time frames if you want to get a more sort of acute signal. If you're looking to get very specific, you're going to want to get more, you want to get tighter on those time frames. But the weekly here just says that there's uncertainty, there's mixed signals going on, but it's coming off of effectively a sell signal. So the sell signal still kind of has, the upper hand there. And the world market, which is our ACWX, view here, you can see still firmly negative. So again, just didn't even turn, didn't budge, still have an outright sell signal there on international equities. If we look at the daily chart of all of these now, so we're looking at a daily view of all four of these, the S&P 500, you can see is still on like a buy signal here on the daily. So the trends have not broken down yet for the S&P 500. It's getting close to this zone. So we could expect some let's move that over and let's say later. So we can expect that these might be tested next week, but so far the benefit of the doubt when you're looking on a daily chart now for the S&P 500 is still green. NASDAQ still green here as well. IWM green. ACWX green as well, certainly looking like it's going to be on test into the next couple of days. So this is where time frame really matters, and this view certainly shows it here when you have like an outright sell signal on the weekly time frame for ACWX, but you have a short-term buy signal or uptrend that this has been in for a few weeks. So hopefully that helps there on looking at those types of views. If we go to credit markets next, you can see on a weekly time frame, investment grade still positive here, even though it had a lousy week. It still has a bullish trend, so that is encouraging. Junk bonds, though, the high yield still looks horrible, and this is a concern here for the market in the sense that we've still been on this sell signal. We're still below trend, and really didn't do any changing of that this week, even though it did close marginally positive. Now the VIX also moved down on the weekly chart here. You can see going into transition mode. We did get a bounce into the end of the week, so it kind of came back and tested this long-term trend, just like the S&P 500 went transition. So did the VIX. So something to keep an eye on, but still, again, benefit of the doubt is still on that buy signal, and TLT here is still very much also on a buy signal. If we look quickly at the daily chart on some of these things, you can see that LQD junk both in yellow transition, volatility on the daily chart still in sell mode, but given the fact that it closed strongly, you could expect that to be tested next week for perhaps a transition mode, and then TLT you can see getting a little bit weaker here on just the daily chart. Now, if we look at commodities, look at the big picture first. This is a weekly chart for gold. You can see nice and healthy here. Green has almost been uninterrupted, acting very well. Look at the polarized difference of silver here. It has been in a sell signal and looking pretty bearish here in the weekly chart. Oil is, of course, a complete mess. Our DBC ETF, which is, still has a lot of oil influence, is a complete mess as well. So nothing changed there. If we want to look quickly at the daily chart on some of these things, you can see now silver went from green to a sell signal, and notice the weekly chart for silver is sell signal too. So this here, if you're looking at this as kind of a bear for silver, that's what this model would show you right now, and it would basically suggest that lower prices are to come. Of course, this is a snapshot of today's values, so new data comes in on Monday. If we do see a sudden surge in silver, then you could expect this to transition. It's just a trend following simple model, so of course it's always going to be using the latest prices, but as of right now it is saying that silver is in a tough spot. Last but not least, if we look at our sectors here, some of the sectors, which I know this is a very busy view, and if you're looking at this on a small screen, it's going to be real difficult, but this is a weekly picture here, and really the couple of standouts I want to mention is XLK. We're going to look at this at the price action side in just a little bit. XLK went green, so technology got a buy signal here on the weekly chart. That is encouraging. Again, lots of strength in XLK. The other standouts here is IBB was green last week, continues to hold green, so nice bullish trend going on in healthcare and XLV and biotech. And last but not least, I think that's it in terms of different behavior. Consumer discretionary trying to turn up here this week as well. So let's get into some of the price action, some of the individual movement here of some of the major sectors first. So the S&P 500. Now we get to our traditional price action analysis, and again, you can see, look at the topping tail here on the S&P 500. So let's switch over to this board here. You can see we basically got all the way up to the 61.8% retracement in the S&P 500, and then take a look at that sort of outside reversal week here, where it tried to probe up and then it effectively failed, closed near its lows. So that is very concerning there. In the short term, kind of ran right into this zone of resistance to 28.90 to 29.30, reversed down, and this is where some caution is now certainly advised. And if we go down to this daily view, you can basically see that we tried to see, I thought I had a different view here. Guess not. So this is, all right, lots of different views there. So basically, you know, the way I'm looking at this is we got a breakout here on Wednesday of this week. So we attempted to break out on Tuesday of this week, and then you can see we basically failed, turned around and closed back in this range. Then we got the nice pop higher on Wednesday, but that was the exciting pop there that basically didn't get anywhere, or it was essentially the highs. Rug was pulled on Thursday, follow through selling on Friday. So basically we're back into this sideways range here. We got stiff resistance now around 29.30 or so, and you know, this is where, again, if we go to a weekly chart now, and we really just think about this from a high level, if you know, if you are bearish on this market, if you are bearish on the events unfolding, the macro environment, growth is slowing, you know, tons of jobless claims, all of the things that we all know are a big concern right now. This is where you're really excited based on this close, because essentially what you have the potential for, and again, not a prediction whatsoever, but I just want to show the potential here, where if this turns out to be a meaningful lower high, which again has all of the footprints for right now with this very loud weekly aggressive looking bearish reversal. But if this was a high, and this is a new lower high that just got put in, and you are very bearish here on the market as a whole, then you do have the setup here, the recipe for this lower high to be a place where you're getting aggressively short. Again, not advising it, not even suggesting it's the best thing to do right now, but if you have that viewpoint, then you now have technicals sort of lining up with a potentially negative fundamental backdrop on this market. So something to think about there, just in terms of big picture. You're looking at weekly candles that can be very loud and meaningful. I think you got one this week here for the S&P 500. Now again, if we go down to the daily chart, like we saw and like we've talked about, we're still making higher lows and higher highs here, so we're going to need to see more follow through. But right now, it looks like the S&P is ready to roll over a bit. Wouldn't be surprised to see it come back down into the lower 2700s. That's where it sold off on the 21st, found some support, so we'll see if that can happen. If we go to the IWM next, IWM here on just a general, price action perspective here, you can see it had the steepest sell-off. It's been stair-stepping higher with these higher lows that have been putting in place. It had this very exuberant sort of, I think, 6 days up in a row, continued to gap higher, and then it really gave a lot back here on Thursday and Friday. And again, you can see a weekly bar chart now, or candlestick chart, showing the aggressive outside reversal of the topping tail here for the IWM. So again, constructive that the IWM was moving higher. It did hold on to positive gains on the week, but it certainly gave a lot up. And just like the S&P 500, it's had a very dangerous looking weekly candle here if we are going to, if we do have the potential to sort of roll over, if sellers do get more confidence and aggressive next week. Last but not least is the NASDAQ 100. Again, as we've been saying in basically all views here, this has been the strongest of all markets. It continues to be so. You can see much more modest reversal. It certainly is a reversal week here. Again, if we go to the daily chart, you can see basically tried to poke into this 220 area, which was where we topped out in late February. You can see that was rejected and we sold off into the 211s. So again, I wouldn't be surprised here if we took a breather, came back down into the 203s again, found out if, fill this gap in here from the 21st. And then just find out if buyers are still interested in stepping in and supporting this market. So again, I think with all these markets short term, I think a little bit lower makes some sense, but we'll still need to see more proof and more of a trend reversal and breakdown in some of these markets to really get confident there on the short side. Now, a couple of individual sectors I want to talk about. First here is XLK. Again, if we just go to our trend view here for XLK, you can see that technology did transition up here this week on a weekly time frame. So again, the individual price action is not too pretty here with this big topping tail, but again, it's demonstrated now enough strength above this weekly trend filter to go into positive territory here. And specifically, if we look at the daily chart now of the XLK, you can see this is also positive. So the way you can interpret this and view this information, again, it's not a direct recommendation and information, and this is obviously going to change, but this here would be indicating that because we have a bull trend on our daily chart, and because the weekly time frame is now in a buy signal as well, you would be looking at this weakness as opportunity to get long. Right, so this is something where if you do get a sell-off into the 86s, 87s, then you wouldn't be looking to try and short a breakdown. You'd actually be looking to potentially buy weakness because your filters there are all positive. So that's one way to interpret the price action. XLK, one of the strongest out there, and even though it's selling off in the short term. IYR, wanted to highlight this because on the weekly chart, you can see this is, again, firmly negative here, still in a sell signal. And you can see this is starting to transition lower. It moved into the transition state. Not a lot to like here. Could be getting ready for a second leg lower, and it's sort of testing support. So got to be careful there in IYR. A little bit of transition mode going on. Last but not least is semiconductors. Semiconductors here as well. You can see transitioning down to the neutral transition trend mode here on the daily chart. It had a pretty loud selling day on Thursday, got aggressive follow through selling on Friday. Semiconductors have been very strong. Again, you can see now that we're still in the yellow here in terms of trend filter. I'm going to make these a little bit darker for the next video, but this is still in the yellow mode here, and it's a very loud outside reversal week. So again, a little bit of caution is advised here where you went neutral, and this is a different position than, say, the XLK. So I'm more confident in buying weakness here in XLK, much less confident in SMH right now, trying to buy that weakness. So I think that's it. I think that's everything. A lot of information today. Lots of things that we covered. Hopefully it makes sense. Hopefully this was helpful. Again, please let me know what you think about this new format, about what we covered today. Was it helpful? Does it help you into the next week? And is it worth looking at all these different views? I'd love to get your feedback in the YouTube section. Comment. You can write me an email if you rather do that. Twitter, pretty much anywhere that you see the video posted. I'll check those comments. So that's it. Thank you so much, as always, for tuning in. Long episode this week, but every Friday we're going to do these videos in this new format. And if you like them, subscribe on YouTube, keep you up to date with all the latest that we publish, or you can check us out at thetraderisk.com. Have a great weekend. We'll see you back here next week.